Hey everyone, I'm Mike Hengy, your mortgage mentor, and today we're breaking down one of the most misunderstood parts of the entire mortgage process: credit. Most people think that credit is complicated or scary, or that lenders are judging their entire life based on a single number. The truth? Credit is just one part of the story, and once you understand how it fits, it makes everything a lot simpler. So today I'm going to explain credit and mortgages in the easiest way you've ever heard. No jargon, no shame, and definitely no lectures. Let's start with the basics. A credit score isn't a credit report. It's not a measure of your intelligence or your character. It's simply a number that tells lenders one thing: how likely are you to pay your bills on time? That's it, nothing more dramatic than that. Your score is based on your payment history, how much credit you're currently using, how long you've had credit, your new accounts, and the types of credit you carry. Think of it like a financial GPA, not an IQ. And the best part, your score is not permanent. It can go up, it can go down, and you have more control than you think. Here's where credit connects to mortgages. Your credit score affects three major things. Number one is your interest rate. Higher score equals lower rate, lower score equals higher rate. A difference of even 20 points can change your payment. Number two, your mortgage insurance on lower down payments. Better credit usually means cheaper mortgage insurance for conventional loans. Two buyers with the same purchase price and down payment can have very different monthly payments. And that's because one person's credit score is higher. Number three, your loan program options. Some programs prefer higher credit, some are more flexible. Some price extremely differently based on credit score. You don't need perfect credit, you just need to understand how it affects your options. Let's simplify the ranges. 760 or higher equals excellent credit. 700 to 759 is great. 680 to 699 is good. 640 to 679 is fair. 580 to 639, there are loan options. Below 580, still possible, but it requires strategy. But here's the key: you don't need perfect credit to buy a home. You don't even need a great score. You just need a plan. Most buyers I work with actually qualify long before they think they do. Different loan types treat credit differently. Conventional loans, they reward higher credit. If your score is 740 or above, you'll usually get the best pricing. FHA loans, they're much more forgiving. Scores in the 600s and sometimes in the 500s can still be approved. So if your credit still isn't where you want it yet, FHA still gives you a doorway into homeownership while you're still building your financial profile. The key here is that you don't need to wait until your score is perfect before you buy a home. You just need to understand which loan type fits your situation today. Let's correct a few myths I hear almost every day. Myth one, checking your own credit hurts your score. Nope, soft pulls don't hurt anything. Myth two, you need an 800 credit score to buy a home. Absolutely not. Most of my clients buy homes with credit scores between 640 and 740. Myth number three, paying off a collection instantly boosts your score. Sometimes it helps, sometimes it doesn't. It depends on the age, type, and reporting. Myth number four, keeping a small credit card balance helps your score. Nope, zero is fine, low is good, high is the enemy. Fixing misconceptions often gives buyers more confidence than anything else. If you want to give your credit score a boost before buying a home, pay your bills on time. This is 35% of your score. Keep your credit card balances low. Under 30% is ideal. Avoid opening new lines of credit before buying. Don't close old credit cards. Age matters. Check for errors on your credit report. They happen more than most people think. Small improvements go a long way. Even a 20 to 40 point increase can save you real money. Here's the secret. Lenders don't just see a number. They see a story. You're not being judged, you're being evaluated based on patterns. If you've had a rough patch, job loss, medical event, divorce, we look at the whole picture. A good lender, and I mean a good lender, helps you build a strategy around your life, not some sort of perfect life or a fantasy. You'd be surprised at how many buyers get pre-approved every day with less than perfect credit. So here's the bottom line. Understanding your credit and how it affects your mortgage is one of the biggest confidence boosts you can have as a buyer. You don't need perfect credit. You don't need to feel embarrassed or overwhelmed. You just need somebody that can explain everything to you simply and guide you step by step. If you want help reviewing your credit, exploring your options, or talking about the next steps, reach out anytime. I'm here to make this easy, clear, and confidence boosting. Let's make homeownership simple, one step at a time.